Nvidia had earnings yesterday and it saved the market for a whole 2 or 3 hours or so before the market crashed again. I mean, we see companies like AMD back in the low 200s, down roughly 7.8%. Palantir down roughly 5.8%. It definitely was one of the scariest days in the market. But I want to share my overall thoughts of why maybe I'm not as scared as many are. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right. So first, let's just start off with earnings, right? So while Nvidia saved the market figuratively in forms of stock prices in the first few hours before crashing, I do believe earnings did give me a lot more confirmation about the strength of the AI market. I mean, we continue to see massive growth in the data center space. We continue to see huge demand for all types of AI solutions. And to me, that just indicates that if the top dog in the AI market is winning, the other players are also benefiting one way or another because they continue to buy these GPUs. And we've heard from all the big tech players, right? Everybody's increasing their capital expenditure. We've heard from TSMC that the AI compounded annual growth rate is expected to continue to grow at some rapid levels. We heard from AMD that the $1 trillion total addressable market potential by 2030. So this is just adding more bullish files to that bullish thesis, right? So for me, even though the stock prices have gone down, the overall thesis of the AI market still being exciting is true to me. And recently, we even have even more bullish excitement here for NVIDIA. Beth Kindig, who is extremely followed in the tech market, just recently said that she is raising her 2030 target on Nvidia from $10 trillion to $20 trillion in market cap. She says it may sound extreme, but my new analysis lays out a data-driven, fundamentally ground case for how Nvidia can realistically reach a 20 trillion market cap by 2030. Now, I'm going to say I honestly have not read the analysis. Feel free to check it out. But to achieve that type of level in the next 4 to 5 years, pretty much 4 years, right? Because we're at the end of 2025. So in the next 4 years, unless we're counting to the end of 2030. So let's say within the next 5 years, the biggest thing that has to happen, in my opinion, is continued innovation in AI, right? Because for this to be a $20 trillion company, the amount of new value that AI has to bring, not just replace old value, right? You can't just replace all value. For you to become a $20 trillion company, you need to have net new value to the world economy, to whatever country economy, to the GDP. And the only way that can happen is if you see massive innovations in the AI space. And I'm going to explain some of those in a bit. And before we go any further, if you haven't, make sure to hit the thumbs up and the subscribe button. My goal is to hit 85,000 subs by the end of the year. We provide free daily coverage on the most critical and AI semiconductor news, as you're seeing, filtering the noise for serious investors. Now, if you want more than YouTube, you want to join the inner circle, make sure to check out whatthechip.com. Use code YouTube for 15% off annual subscription. We have deep dives on semiconductor and AI stocks. We have monthly live Q&A sessions, community of serious investors. We also have new AI agents. Yes, I've added AI to that community to help us all learn more and more. So check out whatthechip.com. Use YouTube for 15% off. Join the community. I'm enjoying everything I'm developing in here. I don't think any other community has AI agents into their platform just yet. And that's what you get when you invest with someone that's heavily focused in the AI market. You're getting top of the line technology. So check it out at whatthechip.com. Is $20 trillion impossible? I'm not going to say I agree with it. Obviously, as an NVIDIA shareholder, I would want that to be true. but I'm gonna say it's definitely not impossible if we continue to grow in this trajectory. Because remember, in the AI market, we're only in the era of chatbots, but we still have so much more to grow. What happens when AI really becomes crazy acceleration in medicine? Let's say some massive some massive healthcare company is able to run an AI prompt for 30 days long, a month, to be able to try to determine if a medicine that they have would be a perfect candidate for them to continue. That 30 days saves that company many months, maybe even years in development, and can save them multi billions of dollars. And if they just pay some crazy hundreds of millions of dollars within that compute, what ends up changing, right? How does that not add more and more medicine projections and more kind of different types of personalized health into this industry? So we need to see innovation like that, right? We need to continue to see innovation. We still are in the era where we're only getting 8 seconds of video. What happens when a big Netflix company is willing to pay a few hundred millions of dollars to make a pure AI video with a prompt so long, or a TV show or whatever, right? There's a gaming company, all different types of entertainment, new styles of entertainment, robotics, right? The robotics market would be completely new, not only just household robotics, enterprise robotics, autonomous vehicle robotics, drones robotics. So all that needs to innovate, and all that needs to be a net new addition to the value being added for it to be possible. Now, with the rates of innovation that we're getting with AI, I think there is a path to be there. Now, I'm gonna assume Beth is probably putting that in some of her data driven, that hey, if the robotics market is really this big, this can be a this $1 trillion company, so this can grow this revenue by this amount of hundreds of billions of dollars. So if I would guess that's the case, but it's exciting to see other people even more bullish into this company. So 20 trillion, let's see. I think 10 trillion is definitely possible with the current landscape that we're going right now. Now, the other thing that I saw is there's this Bloomberg kind of infographic that is going, and how Nvidia and OpenAI are fueling the AI money machine. And it kind of explains everything happening within the space. Now, I would say it's crazy to see this, but remember, there's only limited amount of companies that can even afford these types of AI solutions. So you're only going to see a limited amount of companies doing these types of business, and you might see some form of circular, keeping the ecosystem alive. Now, what I do also want to say is there are some thoughts. There are some people that believe that, hey, look, Amazon deserves a premium for growing AWS 20% year over year without taking part in the diagram below. I just want to say everybody, there is no one not playing this game. I even responded. I was like, Amazon has actually signed a deal with OpenAI, where OpenAI is actually going to use NVIDIA GPUs. And Amazon has built a massive AI data center purely for Anthropic. So while they might not be playing the game with OpenAI, which we already know they are because they have that deal with OpenAI, they also are playing the game with another AI company as well. So everybody in this ecosystem, I mean, OpenAI is also using Google Cloud. Everybody is playing in the ecosystem where they're buying some form of compute, and then that compute is obviously going to go back to NVIDIA. Everyone's playing this game, so it's multiple AI companies. It's not just one, and that's what gets me a little bit happy. It's not just one AI company that can succeed now. You have Anthropic, you have Gemini, and even though Google just uses TPUs at the moment to kind of expand to the amount of infrastructure that they need, a lot of the inference could also be used in NVIDIA GPUs, right? If the demand is there and it's as crazy as it really seems, NVIDIA is continuing to be a king in that space. Now, following here with AI news, there are breaking news that came out just a few minutes before I started recording. Sam Altman reportedly warned insiders that Google was about to leapfrog past OpenAI. And this might be creating even more fear. When your neighbor's success increases the odds of you going bankrupt, you probably have too much debt. So it says Google's recent progress in artificial intelligence could create some temporary economic headwinds for our company, Sam Altman told colleagues last month, though he added that OpenAI would emerge ahead. Obviously, you need to add that point. So things like this can also create even more fear in the AI market because, again, if OpenAI fails, then all these other AI companies and all these other contracts are going to go, right? That's the thesis. I don't believe that's necessarily the true thesis. If OpenAI fails, someone else is going to succeed. And if someone else succeeds at the rate that OpenAI wanted to succeed, all that compute is still going to be needed. So new contracts will be made in the future if OpenAI fails. That's just my overall thoughts because, again, the power right now, compute is definitely a constraint. Maybe not a constraint to where we need it right now, but a constraint to expand it to multiple more places, to multiple more people, to constrain it in how quickly it can go, into what kind of markets it can go. There is definitely that constraint in compute for AI right there. Now, I also want to talk about some recent updates impacting Google. So Google is crazy. I mean, it was almost at $310 from its peak today. The stock is down nearly $17, down roughly 5.5%. Now, Google announced some pretty interesting things, and this is what you want to see: innovation in the AI space. They introduced Nano Banana Pro, so more innovations in the AI aspect, and I am seeing pretty exciting images with Nano Banana Pro. We also saw Gemini 3 drop. I think, was it yesterday or 2 days ago? It feels like forever ago, but I know it's recent. They also announced some other solutions in the AI space. So Google is going. Now, talking about Google, what's this AI bubble if, again, Google Fluid Stack just signed an extra 56 megawatts 10-year AI hosting agreement with Cypher Mining. So Cypher Mining signed Fluid Stack. Now, this is giving Cypher Mining total contract revenue of $3.8 billion over the next 10 years. And Google expands backstop of Fluid Stack's obligation by an additional 333 million, increasing the total backstop to $1.7 billion. So pretty much Google has a backstop of half the money that's going to actually go to total contract revenue here. In theory, this is Google saying, look, if Fluid Stack doesn't want it, I'll take that compute. I'll be able to build my data centers there if needed. So again, how can you tell me there's this AI bubble, this AI scare? When you even see companies like Google, you see companies like Amazon, you see companies like Microsoft, you see companies like Nvidia making all these types of deals where either they need a backstop, they create some form of backstop, or they are even building more and more data center solutions. Now, the overall downturn is obviously scary and probably sucks for maybe some of the new investors. If you are a long-term investor, still sucks, but you probably have the experience to already have felt pain like this. I mean, it gets me excited to see Meta forward PE ratio less than 20 right now. It's sitting at 19.7. You also have Google. Google got a little bit expensive now at 27.24, but still one of the cheapest in the Mag 7. Google, Nvidia is at 30.71. AMD has even fallen to 37. I'm getting excited. I'm definitely purchasing a lot of these Mag 7s right now because I do believe the opportunity and success rate are there. Now, obviously, another thing, continuing with the AI bubble, we continue to see capex continue to grow from all these players, and I don't think that's going to stop anytime soon. Now, unfortunately for CoreWeave and Nebius and other shareholders, it has been a pretty scary day. Nebius touched $100 and something, now at 84. CoreWeave was at 80 and it dropped down to 69, 85, almost 85, right? We saw Iron and other players as well. To me, at least the indication of what we're seeing is that the demand for AI is there. And there is there's the probability that these companies can be success. Obviously, these are a lot more riskier than your Max 7, and that's okay. These are the ones that can be those huge multi-baggers, but with those huge multi-bagger potential also comes the risk and obviously the volatility that we see right now. So for me, CoreWeave had a market cap of $35 billion. Nebius at a market cap of $20 billion. I know a lot of people are bullish in companies like Iron, now a market cap of $12 billion. If you like the stock, it's that same, right? If you like the stock at 50, at 60, at 70, nothing has changed, in my opinion, from the overall thesis. The demand for AI is still there and is continuing to grow. So Either you had a thesis or you didn't. And if you didn't, then that sucks. But for me, companies like CoreWeave, while stock prices are down, I'm still extremely, extremely bullish in them. Now, that's all I have for today's episode. If you have any thoughts, let me know in the comments below. Peace out and see you all next time.